Hi guys, let's analyze Rpglife. It's part of the pharma group. As you see, this is pretty similar to Indoco remedies, right? If you saw, Indoco was also hugging the 50-day, coming pretty close to the 200-day. So what do we have in terms of technicals? Trend has been established, 200 days rising, 50 days rising, and if you see that if you tried doing a breakout trade, you were unsuccessful because although the trend is up, but it's not a very strong trend. It's a weaker trend. So if the stock is in a weak trend, you've got to buy it when it's pulling back, when it's coming to the 200-day moving average, and so on and so forth. Now, been watching this stock for quite some time. There weren't enough opportunities to trade because this was trading very erratic, and I was looking for a good entry point. I've been monitoring this. This was the COVID bottom. The stock went up 200%, without taking a breath with rising volume, which was great. Now, I'll show you something interesting here. This correction was an extremely low volume, and the subsequent correction was also an exceptionally low volume. So when this happened, I was hoping that the stock sort of consolidates and breaks out, which it did not happen. It sort of came down and then broke down further, but it was contained within this range, right? So if you notice, we can we can safely say that the stock is pretty much trading in this range since August last year. So that's the thing about this stock. It's been trading within a 20% range, which is pretty all right. Uh, what got me interested now is this thing went up with good speed, with great volume, and it's pulling back now. So now we have an opportunity to buy this. And the interesting thing is that this correction was also on very low volume, and then this dip which is happening on a relatively low volume as well. So what has happened? Um, Obviously, stock is below the 21-day moving average, so it's a short-term moving average. You don't have to worry about it. We're going to be it's going to be a 2-3 month trade, so we'll see what sort of entries can we make. So I'm buying here close to the 50-day, and it can go down below the 50-day. There are chances that that may happen. However, my stop loss is going to be below the 200-day moving average. So if this stock closes below the 200-day moving average on a weekly basis, very high volume, uh, that will be the trigger for me to get out of this stock. So I'm buying at these levels. Even if it goes below 50, I have a feeling that it goes below 50 and it will quickly reclaim 50. That is what happened here. This it's the trend is up, 50 is also moving upwards. What can also happen now, without being too overconfident, what can also happen is that the stock comes here and then it goes sideways, and then the 50 flattens out. So that can also happen. There are three outcomes to a trade. You buy a stock, it can go down, it can go up, or it can continue to go sideways. So if it continues to go sideways, we will evaluate it based upon how it's moving, and then we will take a call. So the downside is we've defined the downside, and you know we are already in the trade. So I've got some position. I'll be adding more around these levels. Let's look at the fundamentals. It's a small cap company, RPG Life Science. It is into finished dosages and active API as well. But I think they do most of their business in India. I have not done any in-depth study on RPG as such. Great stuff. See, promoter is holding good amount of shares of something that I really like. You know, there are no FIIs in this, but it's a very small company. So FI usually don't buy into 700, 500 crore companies. Usually they don't. So, you know, so that is also one of the reasons why you'll see that most of the small, really small cap stocks They are why are they so erratic? They just can't hold on to their gains. They will go up and then they will quickly succumb because you don't have patient parties holding the stock. Public will just sell the stock if it goes up 10-15%. That is essential. That is essentially the problem. So you need some FII participation. Nevertheless, let's look at the cash flow. Cash flow looks pretty good for a 700 crore company. All right. Balance sheet, there is no loan, no borrowing, so that is pretty good. Profit and loss. So highest profit since 2010. Sales are flat, but they've managed to increase their margin, and that is doing wonders for them. So over a period of time, if you will see since 13, they've done great work. They've increased their margins. Their margins have actually become 250 basis points. They've risen by. Sales have not gone up much. Sales from 230 crores to 400 crores. Sales have doubled, but margins have gone up by 250 basis points. So that is good. That is good. March results are pretty good if you see here, and these are great set of numbers. So I believe that this stock, you'll have to be patient with this. It's not going to be a 50% mover straight up overnight, and whenever it goes up, it is going to meet with some amount of selling. Let's quickly check the all-time high. All-time high is here. See this stock. It goes up, but it quickly meets with selling. Like if you see the stock goes up, say 200%, and then it falls 40-50%. So you have to be for a breakout trader. See up 150%, and then after that it has fallen around 25-30%. Then it went up, say 150%, and then it corrected 45-50%. So then you had another leg up, which was 150%, and then it quickly succumbed and fell 45%. So this is the problem with stocks in which you don't have institutional holding. It it will go up very quickly and then it will just succumb. So you have to be very quick with profit booking in these kind of stocks, and your technical analysis has to be very strong. You need to understand where there is supply coming in the stock and how quickly you should exit the stock. So as of now, we're buying here, and let's see how it plays out. Okay, thank you.